Okay, I'd now like to introduce Darren Gordon, Managing Director of Centaurus Metals. Darren's a chartered accountant with over 25 years' experience in the industry. He has extensive experience financing resource projects, both from a debt and equity experience. He also has 12 years operating experience in Brazil, deep understanding of both the regulatory framework and the operating environment, which puts Centaurus Metals in a very strong position to continue to advance its high-margin, long-life Jaguar nickel sulphide project. Look forward to an update, so please join me in welcoming Darren Gordon.
Thanks, Digby. Great pleasure to be here, and thanks to the organisers for giving us the opportunity to present to everyone here and those online. And I guess when we can reflect back and look at where we were 2 years ago, and it was at Diggers and Dealers in 2019 that we actually announced the transaction with Vale to acquire the Jaguar nickel sulphide project, and it's been quite amazing to see the amount of work that we've been able to achieve, the growth that the company has had, and I guess rewarding a lot of our shareholders have been loyal to us over a long period of time. But today I'd like to just take you through what we've been able to achieve and where we sit right now, and what we look forward to in the growth of the company. You've seen a few of those over the last few days. I'll read those at your leisure. So look, when we acquired Jaguar, we always thought that we were buying into something that could be a very serious development opportunity. As we've continued to do the work on the project, complete further drilling on top of the 55,000 metres of drilling that Vale had, we've been able to see very comfortably that this will be a project that gets developed. And right now we're sitting there with a project that will be a 20,000 tonne per annum producer. And for scale, I guess that will put us somewhere in the top 10 globally of nickel sulphide producers. So that's a pretty significant outcome for this project, and it's all about the resource, it's all about the scale of the opportunity that we have there and the amount of metal that we've got in the project. And I think nickel is going to be really important. We've seen the nickel price continue to rise, but I think the fact that we've got a sulphide project is putting us in a pretty unique position. Sulphide projects will be low emission. It's really the main source, or one of the key sources, for Class 1 nickel. People are looking for Class 1 nickel because it is low emissions. It's going to have a low capital intensity relative to developing a laterite project. And there really has been, I guess, a dearth of exploration going on for nickel sulphides, and we're now in a situation where having such a big resource has put us in a very strong position. We think that nickel will always be a key part of the battery makeup, and when combined with the amount of demand that's currently being seen in the stainless steel sector, we feel like we're in a very good position having a very good nickel sulphide project. So looking at what we have, it's a 20,000 tonne per annum project. That is really important. We've got the team in Brazil that are both experienced in country, but also very experienced with nickel. We're in the Carajás mineral province of northern Brazil, which has got an amazing amount of infrastructure to be able to allow projects like this to get built. We have a very large resource. We put out our JORC resource, the second JORC resource, in March this year, and it's over 550,000 tonnes of contained nickel metal at a grade of around about 1% nickel. So that's a very significant resource in anyone's language, and I don't think there's too many resources that sort of scale that. Through the course of our scoping study work, we've been able to then take a large portion of that and pick that up as production target, and then ultimately what we will feed through the processing plant. And the numbers that you see on screen there are really the project that we're looking to develop is a nickel sulphate project. So taking our nickel through to concentrate, then have concentrate feeding a pressure oxidation circuit and delivering very strong economics. Those economics were done at $7.50 a pound with a 50 cent per pound premium for sulphate. We're seeing much higher numbers than that right now, obviously the nickel price alone, but also the sulphate premium. So the margins are strong. The free cash flow that the project will spin off over a long period of time is very significant. The other aspect of this project that is coming to light, and we've always knew that it would be the case, but we've been able to quantify that more recently, is our emissions level. So at just over 4.5 tonnes of carbon per tonne of nickel equivalent, we're going to be very low on the emissions curve, and I'll step through that in a sec. Outside of what we've already defined, we've got a pretty aggressive drill program underway. We're looking to complete 65,000 metres of drilling in 2021. 6 diamond rigs there at the moment, another 2 diamond rigs arriving in August, and we've got an RC rig doing some of our regional work. So this project is definitely going to grow from what is already a very significant position. You can sort of see there the Carajás mineral province, some very large operating mines of Vale there, Salobo up top of screen, big IOCG deposit, large production base. Sossego is another operating copper mine there, and importantly S11D, biggest, highest grade iron ore deposit around the globe. So you have an airstrip. You can fly into Parapebas on 737 jets, 250,000 people in Parapebas. Sealed roads down to where we are. Onto Puma Ferro nickel operation of Vale is only 15 kilometres from where we are, and they've got sealed road all the way to their front door. We have high voltage power very close to the project, in which we'll be able to feed into. So everything exists in this region to be able to get a project up and running. You can see from the Google image there that we're principally dealing with farmland, not a lot of vegetation in the area. So again, another attribute to the project which will allow this project to get up and running. As I touched upon, there's 40 k's from the project that runs through the town of Tucumã. We have high voltage power. We're doing the work to connect into that power system. Importantly, the grid power system in Brazil is run 80% on renewables. Right now, that's just the standard, and that's one of the reasons why we've got such low emissions, but it also means why we've got such competitive operating costs, and our power is likely to be under 10 cents a kilowatt hour. So you don't get that every day of the week. You can see there we've got a population base around where we are, around 70,000 people, a couple of towns. So very significant base to source our labour from, and we'll do a lot of work training up the people in that region. We've got sealed roads all the way through to Vila do Conde port, where we'll look to take our product out of. Alternatively, we may be able to do a deal with Vale on their rail system, but that's still to be worked through. And this is one of the aspect that I touched upon a bit earlier, just where we're going to sit from an emissions perspective. At 4.7 tonnes of carbon per tonne of nickel equivalent, we will be in the top 3% of production globally for nickel. You can sort of see the grey bars there. They're more of the ferro-nickel and the MPI projects. As you move down the curve, you've got the HPAL projects in laterites, and then you're moving into the sulphide projects. We're right down at the bottom of that. That's principally because of the power and where it's run from. We would expect that even when we get ourselves into production, we may be able to go on 100% renewables. But we've already got a very good starting position. So when you look at the resource, as I said, we're about 560,000 tonnes of contained nickel metal. We've been able to convert a large portion of that. Importantly, there's over 80% of that resource sitting in the top 200 metres. So most of the mineralisation that we've got in the scoping study right now is coming out of open pits with a number of undergrounds. Those undergrounds really are constrained only by drilling. And when you look at the model in 3D, you'll see that where those undergrounds go to is really only because we haven't got any further drilling deeper than that. And therein lies the opportunity that as we drill deeper, we will expect to find more mineralisation and be able to extend our deposits and those underground opportunities. The total capex of the project was about $280 million US to take it all the way through to sulphate. Very low capital intensity on that basis at around 14,000 bucks a tonne of annual nickel production. And all those numbers generate through to about just under 2 years of payback. And that's because the cash flows that the project spins off or will spin off are very significant. And that capital cost is covering all of what you see on the screen as far as preparing the mines, opening them up, building the tailings dam, which will be an integrated wasteland form, which is important for us because it's the highest safety factor against embankment failure, other than putting your tailings into an old pit. So we're using the waste as we're opening up the pits. We'll build that tailings dam, build the waste dumps, and obviously optimise the project that way. And we do have further opportunity to, improve the project as we go through the definitive feasibility study phase. Right now you can sort of see we're sitting pretty close to $9 a pound. At $9 a pound, the MPV, this project post-tax, is pushing out to sort of about 1.6 billion Aussie dollars and a 70% IRR. We think that that's a very comfortable price. We see that that's a realistic opportunity for the life of the project. And if we get that over a 13-year mine life, which is the initial mine life, we're going to generate very, very significant cash flows. The mine schedule has got the ability to be further optimised. It was only a scoping study, so we're moving down bench by bench at the moment. But as we look to do starter pits and then cutbacks, I think that mine schedule and the early cash flows will be benefited. The CapEx and the OpEx will hopefully improve as we price more things in local currency and then obviously converting them back into US dollars. And the process route had us producing a nickel sulphate and a mixed sulphide precipitate. There's some work to be done around that mixed sulphide precipitate and what that looks like and the sort of products that we can produce out of that. From an environmental point of view, we've done an enormous amount of work to get ourselves ready to lodge our EIREMA. We're imminently ready to lodge that document. That will start our approvals process, and right now that approvals process still is the time determining factor for us to production. So it's super important that we get that in, we get the ball rolling, we engage with the environmental agencies to get our project approved. We're also doing a lot of work with the local municipalities, improving the roads, helping out on a bit of the water supply, and we're obviously protecting our people during the time of COVID, and I think we've done an amazing job with the team that we've got in country to really make sure that all of our guys are safe during what has been a pretty challenging time from a COVID perspective. Exploration-wise, as I touched upon, there's 65,000 metres of drilling that was to be done in 2021. We're probably about halfway there, and we've got about 25,000 metres of drilling to be done on regional targets out on the western portion of that tenement. So you can sort of see on the right-hand side of the tenement, there's probably about 300 odd drill holes that have gone into Jaguar and the Onça deposits. And out on the western portion of the tenement, we're a much lower number of drill holes. So the RC drill rig is working there, testing targets that have been generated from the soils and from magnetics and also fixed loop EM work. We're hopeful that we find more mineralisation there, but as we bring the 8 rigs on by the end of August, 8 diamond rigs, we'll probably be drilling half of the drilling into infill targets and then the other half stepping out and testing some more of the deeper positions. And up until now, we haven't really had the need to drill the deeper positions because we've had so much mineralisation to chase at surface. You can see from some of those sections, very wide intersections, very good grades. The nature of that core there, 12 metres at 5% nickel, it's the sort of thing that we're chasing. We had a drill hole just recently that went 59 metres at a bit over 2% with I think 17 metres at about 5. So that sort of mineralisation does exist within this. We've got to continue to test those targets, and I guess the whole idea with that is either being able to drive the pits deeper or add more mineralisation into the underground positions. We think that we can add 20 to 30,000 tonnes of nickel metal for every 50 metres we can step out down dip. So that's a really interesting target for us. You can do the maths, at 20,000 tonnes a year, we're sort of adding 1.5 tonnes for every 50 metres if we're successful. So timeline-wise, we've got the resource upgrade. We've got to lodge the environmental impact assessment shortly. That will get the ball rolling. We'll be looking to get our critical licences through by the first quarter of 2023. That'll in turn allow the mining lease to be formally granted, and in turn allow us to make a formal decision to mine at the sort of second half of 2023. It's a pretty aggressive timeline, but we've done a lot of work to date, and we've got to continue to really push hard to meet that. So we're a nickel-focused company looking to supply Class 1 nickel into this growing market. We believe that with the emissions levels where they are, with the size of the resource that we have, and that the fact that we can produce at a very high level is going to sit very well in the market. The economics are strong. You can see that from what we've already done at relatively conservative nickel prices, and as those nickel prices continue to rise, which we hope obviously continues to happen, we see that opportunity for our shareholders to continue to grow. We've got a market cap of about $350 million at the moment, but you can sort of see with the net present value of those projects that there is still plenty of opportunity. The exploration is very good. The guys have done a great job exploring to date, adding to the resource base. We'll hopefully have a new resource out by the end of the fourth quarter this year. And we've got the team of people in country and with experience in nickel to really develop this. So thank you for your time. We think that Centaurus is on the way up. Cheers.
Thanks very much. Thanks for that, very comprehensive. We're out of time for questions, I'm sorry, Darren, so thank you.